Right, so a very warm welcome to everyone. This is the 12th of February 2016, Friday. The markets have closed, and we are asking the question today, where are the global and local markets, and where are they headed next, basically, right? So we are, as we all know, this week has been a pretty nasty week for some people. It's also been a very profitable week for some people. If you were short, you would have made a lot of money. The Nifty has gone well below 7,000, as we all know, and it has definitely come much faster than I think most people had anticipated, or actually, it might be even fair to say that most people did not even anticipate Nifty coming to the level it has, right? So very quickly, this is the Nifty chart that you should be able to see at your end. Please confirm in case you can't. And I have really not done much with it in terms of adding any studies or doing any changes to this at all. Uh, for those of us who've been regular on the IMR and perhaps were there on the 11th Jan 2016, right? So this is just the recording of that session on 11th Jan 2016. So this is, just well, exactly a month behind. We asked the question, where are the markets heading at that time, if you remember? And if you remember that session, uh, I'm not going to play it. It's a free session. I hope you had time to review it, maybe before this session or at a month back. And that time we had very categorically said in our discussions that we are definitely headed lower, and most probably we are looking at 6,800, 6,300 levels, etc. So, we had basically discussed a lot of things at that time, and the market at that time was around 7,500, and perhaps nobody took that seriously. I'm sure most people did not. It was like, what's the big deal? So if I put the chart back, this is where we were approximately, right? So if you're following my cursor, right, on the red, right, this is where that was around 8,000, sorry, right, and just slipped a little bit below that. And it was in that session that I had put this, arrow here, that you can see this red, this arrow pointing downwards, and had done nothing else and just let this, chart continue. And this is, well, now updated till today, and you can see that we have fallen, well, 800, 900 points since the time of that session. And at that time, we had mentioned 6,800 as a level, and we had even mentioned 6,300 as a session. And I just want to recap because, that's where the market, well, what was today's low? Today's low was 6,869. Now, it did not, of course, come to 6,800, but it did form a hammer candle at today's, right? Of course, it's subject to confirmation, and it has done that on really, really large volumes. And of course, yesterday, this big red Marubozu candle is still a worry. So there's immense downward selling pressure, which is very much there in the markets. And we've come close to that 6,800 mark, but the downtrend is actually now accelerating, right? So if I were to draw the fresh line, then this is the, you know, uh, more recent line, as you can see. And this is typical of bear markets. They will start to go down faster and faster. And at some point, we need a capitulation wave or a move. Could be an intraday move, which actually, in my opinion, has still not come. And for all we know, this is just a pause in the larger scheme of things, as in just pausing, maybe bounce up, and then continue down. So if we're just following simple door theory, we've got very firmly established lower tops, lower bottoms, and the moves down are happening on higher volume. If you look at this on the weekly chart, then you can see something even more dramatic, which is that this week has been a pretty bloody week, right? Figuratively and metaphorically and literally, maybe for some people, unfortunately. And we've got the largest weekly red candle for many, many months, for at least maybe 2 3 years. And is this the end? Well, if you want to go back and compare this with, let's say, the 2008 fall, which is a lot of what people are talking about, and this is what you see on your screen right now, it's the 2008 fall. You can see that similar sized candles happened here. If you follow my cursor a little bit on the left, and then like there were 3 4, this is now in a weekly mode, remember, and we've had 2 3 weeks like that. And if I can draw your attention to this particular candle here, you can see that it was an inverted hammer but no confirmation, right? So the reason I'm just showing this from 8 years back literally is just 1 second. uh, okay, 1 second. um, yeah, all right. So if you look at the screen right now, you can see that the European markets are nice and healthily quite up. That should cheer up a lot of people. 2% after many many days of really multi-percent falls. And if we look at US as we speak, then well, mixed bag. So we have the S&P 500 600, which is in the green, but the S&P main index is why is this? No, 1 second, this is not updated yet. Okay, we will just need to wait for the updates to come in. So we'll do that later. Okay. All right. So at least the Dow Jones is in, and that's about 1% up on the Dow Jones, as you can see, and on the Nasdaq, it's all you know 0.5 to 1% up. So at least for now, we know where the markets have opened. Europe and the US quite bullish today. Right. Now with that input, let's look at where we are as far as the global markets are concerned. And this is the Dow Jones Industrial Average. Some of you might remember seeing this when we did this a month back. And if we zoom into where we are right now, so we're looking at this from 2013 onwards. It went in 2015, did a not nice distribution top for several months, actually 6 months of the year, came crashing down from 18,000 to 16,000, went back up again, could not make a new high, and has come back down. Now this is where we are at as we speak. All right, so if we zoom in, then at that 15,400 mark, there's a nice triple bottom at this point. And today is of course green, so we are expecting it to move up. And the question really is this now support which is going to hold? Okay, which is going to be a little difficult to answer, because this could just be a bounce and we could just fall quickly after that. We have no idea, but for now that support of around 15,400 15,500 has definitely held. This is a multi-month support, and should this hold, then at least from the Dow Jones perspective, things could be the fall could be over. And remember that the US economy is generally said to be doing well, in spite of all the stuff things happening across the world, including China, of course. But Janet Yellen, who is the chairman of the Fed, yesterday in the congressional meet did say that lower oil prices are good for the US economy, and there is a demand issue on crude oil. So fundamentally, demand is lower. So even if supply comes down, which is one of the things we discussed in the previous IMR, which I don't think anything happened. There was this talk between Russia and Saudi Arabia about cutting down supply. I don't know if anything happened on that. I don't think anything was agreed to or implemented for that matter. And so what Janet is basically saying is, there's a demand issue, and even if the supply, and the implication of that, not what she said, but the direct implication of that is, even if supply is cut by the OPEC countries, demand has come down globally, right? All said and done, however, lower crude oil prices are good for the US. This is something she also mentioned. So from the US perspective, it's all good. But that puts a whole different set of issues to deal with on the Middle East side, and things are most probably likely to get worse in the Middle East on the account of crude oil prices before they get better. So US is an island of growth right now, and it still is the world's largest economy, and well, can't say things are really out of hand as far as the stock market is concerned in the US. So that's a positive sign for us to look at. Right? If you look at the S&P 500, which is going to give us a much wider view of the market, unfortunately, this is not the this is the only data I have, which is only from uh, oh, this is a little curious. 1 second. Yeah. Okay, so this is only for the last, what, 5 months. You've got the same double bottom here, tweezers bottom, actually. Just follow my cursor, and we are bouncing off of that. So the broader market, S&P 500, also looking okay here. And then if we start going into Europe, we look at the FTSE, right? And this is the weekly chart of the FTSE right from 2008. This is a big massive crash, 2008, recovered, made a new life high, and now we are well below the 2008-7 peak, right? So 6,800 was on the FTSE. Now we're looking at 5,500 on the FTSE. So clearly, European markets are now trading below their 2007-8 highs. And if we, zoom in, and this one is clearly in a downtrend. So unlike US, which seems to have found a support, the the FTSE at least, we'll of course look at the DAX and all, is really not at a place of support. And again here, the downtrend has become faster. If anything, we have a bounce today, but is that the end of the fall? At least from a Dow theory perspective, no. And we are definitely not at a support. So 5,400 would be a support. That's another 150, 200 points down. But that support is a pretty strong support, as you can see. So not very far down are multi-year supports on the charts, and the whole support zone, if not just this, there's a whole zone of support which is there that we have to now consider, because this is so if we had to put a band here, it would be in this. Right, I'm not sure how this works. Okay, 1 second. Okay, just ignore those lines, please. I need to, the band is coming, but it's not shading it up, so something with the software. Anyhow, so we are at a support zone as far as the FTSE is concerned. Then if we look at the DAX, right? So DAX is also so luckily, so the DAX is not coming to has not yet come to its 2008 high, but definitely well on its way there. So from 12,000 back to around 8,000, that's a steep cut, almost 40%. And if we zoom in, then you can see that there's a bottom here from last year. So this is the similar to the Dow Jones, double or triple bottom. But again, we have a bounce today, but not really at a support. Having said that, like I said, there is support not too far down. So we're looking at about another 10% maximum fall, right, before that support is reached. Now, I'm not saying when I say maximum fall, please don't treat that as the end of the fall, but quite possible this is where the prior bull market ended, and a secular bull market. Then you've had this massive correction, again an up move, and it could end there. And there is also the European Central Bank program to pump in money and do some things and all. So we'll have to see how that goes. Right. Just for the sake of completion, we look at CAC France. And well, there is one economy which did not even recover back to its 2008 peak, and it is now on its way clearly down. But again, there is some support at that white line, and we could be getting at least a multi-year support level from 2013 and even from 2010, right? And that is, again, if we look at it closer, it's, oops, sorry, it's not very far off actually. Why is that not working? All right, so something. Okay, let me just zoom in. All right, there we go. So as far as the CAC is concerned, not very far from its um, bottom again of October of 2014. So major indices across the world are really at some good support levels or close to support levels. So US is very clearly at support and bounced off from there today. Europe is either there or 5 to 10% lower. Nikkei, I'm not sure why it's appearing like this. Something wrong with the scaling here. I hope you can make out. But that's also at an not really near good support, but could definitely um, come to about 14,000 and find some good support. And we are at about 15,000 now. So another not less than 10%, 7-8%. So somewhere around 5 to 10% lower than where we are right now. Global markets couldn't find support. Now, if those supports break, then we are in definitely big time trouble. Now, translating that into the Indian market, if we go back to our Nifty, then just roughly 10% of 7,000 is 700 points, and that would be 6,300. It suddenly falls 200 points in a day. You could get that in a week or two, right? And just to remind us all, some of you have probably gotten quite tired of me saying this over and over again, but it is worth repeating that if it does come to 6,300, that is a multi-year support of the Nifty from 2007, 2010, 2013, and 2014. And at least that makes me very happy if 6,300 does come for two reasons, right? One is that multi-year resistance will then get tested as support, which is something which is in my opinion, an important concept and core concept in Dow theory, that about supports and resistance is switching roles, and some major resistance like this not being tested the other way, that's a little tough. So personally, since I strongly subscribe to that idea, and I've seen it work a lot, I'm happy if 6,300 gets tested earlier rather than later, right? The second thing is that it will be a good chance to buy, right? Uh, and anyone sitting on cash or can arrange cash will probably get really definitely far better valuations than just 3-4 months back, and perhaps something which you may not get for another few years. So I would strongly encourage people to look at having cash holdings or generating cash from whatever fixed deposits, maybe gold, maybe I know there are some people in BIC who are very seriously thinking about selling a plot or two so that they can put it into the stock market when the time comes, right? Because I really think the opportunity is coming. There are, of course, global challenges. There are issues of growth. There is issues of all the NPAs in the Indian banks. We'll discuss that in a while. But all said and done, India does grow, will grow, even if the global economy does come down. And US is growing, so generally good. And crude oil has come down, and it's probably stay down for at least some time, which should be good for the Indian economy. And we'll sort out our domestic problems. Whatever it is, what I'm saying is, even if growth slows, growth will be there, and it'll be when the time comes, it'll be great time to take advantage of the opportunity. Like I said, re-emphasizing, we're not going to get this perhaps again for another 3-4 years. I know how much I regret not having money to get into the market in 2008-9, and then just seeing it fly away. Well, I hope we don't make the same mistake and have the same regrets this time around. Okay, so that's the broad view on the markets. If anyone has any questions or points at this point, to jump in. Just put it in the chat before I get into any issues that we need to think about. So if there is anything, just put it up on the chat, and I'll just read that and respond. In the meantime, I'll just continue. Right. So broadly, the question is, where next is probably down, and probably down for another 5-10%, unless US markets have really taken strong support, as they have seemed to today, and that pulls the rest of the world up, which is, in my opinion, quite feasible. The China slowdown, I think, is getting factored in decisively, and you know reconciliation to the fact that they are not going to grow so fast is definitely happening. Right? It's still not fully priced in, but it will get priced in definitely within the next few months within this year. So broad answer to the question: down. Should we short on a bounce? Maybe, but maybe we've also. I think next week will be critical in terms of knowing whether the trend is going to reverse or not. Okay, so unless you find some really strong buying opportunities, which some of them we might discuss today, the best thing would be to actually sit on the sidelines and watch carefully for the next 1, 2, 3 weeks. Again, there's a budget that we have, could do a lot of things. Okay, last time around we were discussing some of these factors, and I just want to very, very quickly review them. The Russian finance minister, oil minister, saying that they're considering, along with Saudi Arabia, a cut. As far as I know, this did not happen, so we can just remove that. And instead of that, I'm going to put here Janet Yellen's testimony to Congress, where she said oil demand is lower, right? So that is definitely Janet, right? So that is definitely a concern, because how do you increase demand? Cutting supply is easy, right? You just pump less, transport less, just ship less. But demand is something where somebody is going to buy only if they need it. And how do you stimulate demand across the board? That's really a tough one. And demand across the world has come down, right? Okay, so basically that BOJ has introduced negative interest rates. Let me just add that basically we now have the ECB and the Swiss bank, right, and the BOJ, some major economies in the world, all into negative interest rates. And quite honestly, people are now skeptical about whether those that mechanism really works. So something really core, fundamental in the global economy is really not all that healthy, right? Local factors coming to India. So we've got a budget. Okay, so that was 4 weeks. Now it's 2 weeks. GST is probably out, right? It's very, very unlikely to happen. There's a rumor, by the way, floating around today that long-term capital gains tax may be for stocks, right? Which is right now for 1 year or more, could be 3 years, right? And that's definitely going to be a bummer to the sentiment, because then you have to hold for 3 years to get zero tax, and all that happens. Then to hell with long term, everything becomes short term, and we just keep it 15% to be happy. Hopefully, they are not going to increase short term capital gains tax to a higher rate, and just do this. At least I'm okay with it, but who knows? Higher crude, we did consider that because oil had gone above 30. I think we can rule that out for now. RBI policy came and went. We were talking about an unexpected rate cut, but that did not happen. And RBI policy has basically remained unchanged. Now, one thing Raghuram Rajan did say yes today, and coming to local factors, is the growing recognition. I think the concern was always there in the appropriate quarters of RBI and the government of NPAs by especially public sector banks, right? Something like the Punjab National Bank, and I'm not remembering the other one, already some 9% level NPA, which is huge, right? And that's really not acceptable. So banks are under tremendous stress, as we have seen the stock prices falling. And Raghuram Rajan said that by 2017, so that is 1 year from now, uh, all the banks in India, especially the public sector banks, would have taken care of their NPAs, committed that they would be cleaned up, and the bank balance sheets would be very healthy, and there would be recapitalization. Now, where the money for recapitalization would come from is anybody's guess, but let's see, how that goes. And now that brings us to one thing, which is that if you're talking about this, could it take 6 to 12 months to get cleaned up in the system, right? And if it takes 6 to 12 months to get cleaned up in the system, then we've got maybe 6 to, I wouldn't say 6 to 12 months of worry, but definitely uh, we've got couldn't expect shouldn't expect rather, maybe the public sector banks especially to rally up very rapidly. Private sector banks might, some specific funds, but the public sector banks could just provide a deep, um, what would I say, source of anxiety to the market. And remember, banking is a pretty big weightage in the Nifty, right? So putting this, because this sort of time frame, so for us to get a sense of how long things might take for, in quotes, major or significant turnaround to happen, right? All right. So those are the local factors. In terms of, I think budget. So now the other thing that Jaitley has admitted is the slowdown in the Indian economy, and are they going to do any big time reforms or opening up to allow FDI to come in? For FDI to come in, and if that happens, then some at least sentimental, leg up in the market, which we'll know in about, 2 weeks, exactly almost from today, right? So till then, uh, it's probably sidewards at best. but a bias towards the downside. Again, given today's bounce in the European and in American markets, we'll have to watch. So next week will give us some clue by Monday, Tuesday. Okay, so these were some, uh, you know, notes we had made. I'm just going to remove that so that we can move on. All right. So that's basically the sort of the political side of the market and the review of that. Let's now very quickly look at some of you who might have seen the, yeah, so this is the relative chart of the market. And okay, what I wanted to do is actually, right, so the high was, when was this? Uh, March, May 2015. Let's look at May 2015 as benchmark, right? So I'm just going to squeeze this out. All right, so what you're seeing is a relative chart. I hope it's clear. Let me try this 1 second. Uh, okay, I'm just going to do this for some time. I'll take it back. I hope it's clearer with that white background, right? Okay, so I can't make this thicker, unfortunately, and you may have to pay some close attention. I cannot change the lines, at least I don't know how. And what you have is this blue line, if you can just follow my cursor, is the relative line of where the Nifty is compared to its high. So it's approximately about, 14% down, not exactly. Let me just squeeze that out a bit more. Okay, so it all depends on what the reference date is. Yeah, so about 13 and a half, 14% according to this, right, from its life high. And what you see on top, this gray line, which is up 16%, is basically, where is that? Um, Consumer durables, right? So this is something that we had mentioned last time session about consumer durables being actually the best performing index, and we actually did mention some very clear cut long opportunities. So consumer durables has done exceptionally well compared to the rest of the market, but everything else has really just gone down. And if you just focus on the last part of the market here, then you can see that all of them have trended down. All these are the various sector indices. Maybe I should have said that, my apologies. So each line is a different sector index, right? There was some support here for some of these indices, for capital goods, for realty, and for which is this one more, yellow, CNX Infra, but after just dilly-dallying for many months, they just also collapsed in the last 2 weeks. This last one at the bottom, however, right? So this one is at minus 35%, so 35% fall, and that is actually BSE metal index, right? So that one has actually not fallen. Everything else has fallen. So BSE metal on one extreme, and on the top you've got consumer durables. These are the two sectors which seem, consumer durables clearly showing a lot of strength, and at the bottom here you've got your um, metals, which maybe very tentatively saying maybe bottoming out. All the other sectors, however, are clearly trending down. So maybe there are opportunities. We said this in the last several sessions also, that metals may be providing opportunities. One of the things that just happened, I think yesterday or the day before, is all the Indian metal companies have increased steel prices by about 4%, because the government put some barriers on Chinese imports. But anyhow, so that's good for the metals, not so good for the capital good companies, obviously. All right, so we know that most of the market is heading down, so there should be some good shorting opportunities. On the other hand, there could be some good long ones. All right. So with that, let's jump into the individual stocks, and instead of doing the entire Nifty or Nifty Junior, I'm hoping we can make this more productive today, and I'm going to try and use this daily market report that some of you are perhaps aware of, something that I generate every day to help find opportunities quickly rather than having to scan a whole set of charts, right? Um, so before we really use this, I would still want to finish off with the metal pack, right? Because there is some strength, and review the consumer durable pack, right? So for that, I just need to get the list up. So, okay, so this is the consumer durable set of stocks. Rajesh exports to Blue Star, and of course, there are more. And what I want to do is specifically go through these, like we did in the previous session, and look at if you find any opportunities here on the long side. So let me just put that away, and then we can start looking at those stocks. All right, I need to go back to my, otherwise you're just not going to be able to see it. All right. Okay. So starting with, I'm just going by the list which was coming up there, not any other reason. Okay. All right. So here we had Rajesh exports. Okay. And this is really a strange uh, pattern, and I think this should be more from an academic perspective. I mean, if you look at it, it's just gone such a thin set of candles for such a long period of time, almost 3 months, and you can see how sharply the volume has just disappeared in the trading side, but it really has not fallen. And the key thing to watch out for will be really this level, and the market has not even come there. I'm just going to extend it into the future, and if this level were to crack, right, and that is at around 600 and where is that, 670, right? Basically, if 670 were to break, then one should not look at it. Otherwise, that it's like more like a topping out pattern. It's not a happy sign. So we'll wait and watch. Next, Titan. All right. So Titan life high 440. Zooming into the recent stuff, right? So we can forget about the past. All right, so zooming into the recent stuff, life at 440 has made a good base at 320 over 2 3 years. Went back up after that, and then after going to 390 has come down, but a lot of buying support, and it's actually on an uptrend at this point, right? Today, big long lower shadow, and this could definitely be a stock which is uh, worth having on your watch list. Many reasons. There are multiple long-term moving averages sitting right there. Of course, they seem to be threatened right now, but nevertheless holding up quite nicely, and who knows, just might see it go up, especially above 375. It should be a buy, and it should be sold below 335, but 315 is really good support. Okay. PC jeweler. All right. So this one, we've had a symmetrical triangle, really petered out of the tip of it, really not doing any measuring implication at this point, so there's really not much significance of that now. 425 is where the top is, and that is where you've got a lot of resistance clearly today and yesterday. Just cracked with the rest of the market. Please notice when it cracked yesterday, the extremely low volumes, right? You can see that the very small, right at the bottom, just follow my cursor. The volume is what I'm looking at. Very, very small volume. Today, however, big, churn around of that stock. So little difficult to read. The stop loss should be below 340, but once it goes above 440, this is definitely a good buying opportunity. Right? Then Hitachi Home. Okay, so 1000 psychological mark, really good support. Went from 1400 to 1000, went up all the way to 1250 somewhere in Feb. Massive down move to 1000 and recovered. Today, yesterday and today still falling, but keep 1020 as an alert on Hitachi Home. Then watch that carefully, and if it takes support there and shows signs of going up, then definitely could be a stock to buy. Yes, there are moving averages on top, but this is 1000 is the place to really consider maybe getting in if and when it comes. Symphony is next. Okay, so remember summer is coming, by the way. Well, it's actually almost not coming, it has come. Bangalore is much hotter at this time than normal. Okay, so first of all, we hardly had a winter, and the summer is quite strong. uh, so March has not even come. We're 2 weeks away, and I'm guessing that's how it is rest of the you know rest of India. So just giving a different angle to the fact that these guys uh, um, could make a lot more money in the coming quarter and report good results 2 quarters down. So that's just on the fundamental side, but then technically, uh, look at yesterday, right? Big lower shadow. Today went down, but not on very large volumes. Around 2000 psychological mark again. This is a stock which could find buyers, and seasonality wise, good place to uh, good timing maybe, right? But if you're buying this, then below 1950 is where your stop loss should be, and definitely if it goes above 26 2260 2270, especially if it does that on volumes, just close your eyes and I would say buy. Right? Okay, next is Videocon. Videocon Industries, well, forget it. I mean, such a distinctly different pattern, as you can see, is just like, it's like on a glide path down. Not sure where this is going to end. Maybe 100. Right, it's okay. Something is missing in my data. Okay. Maybe 100, 2009 lows almost. That's where it is. That's where it is at now. All right. Let's put 100 and another 8% fall from these levels. It could find some really good psychological support. No hurry to bite at all. Just keep watching, and in case uh, I think 100 will come. There will be one push rather to make it go to 100 by the by the bears, and that's when one should revisit it and buy. On the other hand, if it can go above 113 with good volumes, then buy it. But please remember, you'll have to be probably very patient with this. Lots of these long-term moving average resistances right on top, and your headroom is definitely not very much. So don't expect quick profits or too much profits. Maybe good for trading and not so good for investing. All right, Bajaj Electricals. So sometime back when you were looking at this, looked like an attempt to go up, but clearly broken down and has on Wednesday the volumes were exceptionally high, as you can see this green volume. Some buying, massive buying happened, and then this move day before yesterday is purely sentimental in my opinion. The volumes are clearly lower. Somebody or some institution seems to be wanting to pick up Bajaj Electricals at those lower levels. Please note 2012, 2013, how it is a multi-year bottom. So I think Bajaj Electricals is definitely something I'm going to put up here. Okay. All right. So maybe a good place to buy. Okay. All right. Okay. So 160 or thereabouts, put a watch list and pick it up if appropriate. Whirlpool. All right. So massive big Marubozu green candle there. Right at that time, those volumes were relatively high. Then you have this big red candle, green candle, massive upper shadow again on very large volumes. And now we have got this much lower this hammer type formation, and 550, right? 550 definitely seems to be a level to watch out for. Okay. All right, so 550 is a level to watch out for. And could it stop there? Maybe. I think for those of us who are aggressive, you could look at it, put an alert there. But if it breaks below 550, comes to 545 or something, just quickly get out of it. Right. So while there is clearly some interest in buying by some big timers, if the market sentiment, so we are basically looking at two opposite forces here. The markets could go down another 5-10%, but some of the stocks are at good supports and there's a lot of buying, and at least temporarily you could get a spike down and probably get a very good recovery. None of these stocks we've discussed so far should be uh, I think sold or shorted. If it does go down, get out, but watch it for some support at lower levels to re-enter. TTK Prestige, well, that's definitely holding up, isn't it? Even the moving averages are nice and steady, like a nice firm foundation or a road, if you can imagine, on top of which they're just traveling. So the thing about this is now gone into a massive multi-year consolidation. This stock in 2008-9 was about $150, and in 2 years it went to 2,500 or even 3,000 rupees. And then it's from there, it's not done too much, 3,000 to, so if I zoom in, you will see that this is sort of the top level around 3,900, and this is the lower level at around 3,200 that it has stayed there for a good 3.5 years. Did a breakout, but the volumes were really not there. And then we've got right that level there, which is, I think it's life high, right? Yep, it's the life high, right? And essentially what you have is a stock which has stuck pretty close to its life high, a pretty good double top. But if this does recover at around 4,000 seems to be a good place to buy. It has come there quite a few times in the last several months. I'm going to put another line there at 4,000. Okay, just for clarity, we'll just make it a dotted line, right? So you can see how such a specific level of resistance hides here, the lows there, and today's low also. So today's low is at exactly 4,000, as you can see, and has bounced up from there. Of course, there is the issue of this short-term downtrend, but I think that 4,000 mark is definitely something worth tracking. If it holds, it will put about your stop loss about 120 rupees lower, and if it does goes above 43, then definitely up all the way to 4748, which is a good 10-15% return. Then we've got Blue Star. Right, so rectangle formation for 6-7 months, a clear breakdown, very clear breakdown, big volumes, etc. Has it met the measuring implication? Probably not. 330 to 390, at least 60 rupees of 330. It should have gone to at least 270. It hasn't gone there. Okay, and could it? Well, I would say tough to say right now, because you've got 300 as a really good support, right? And if 300 holds, then ACs and all the other appliances, not sure they are the top of the mind recall in refrigeration commercial, yes, but not so much on the domestic side. But these guys are big, right? So Voltas, Blue Star, and all industrial side. And like I said, bad summer or very hot summer, another company that could do well, right? Okay, so I think Bajaj Electrical really stood out. Then I'd also want to add Symphony, TTK, and Blue Star, right? So none of them are recommendations. Okay, these are just views, and we need to keep a watch on those. Okay, so let's then, we were looking at also the metal stocks. So let's have a look at those metal stocks and see which metal stocks could be, things to watch out for. Okay, so let me put the BSE metal first. All right, so that's the BSE metal index. Okay, and let's see. Okay, where are the symbols? Watch list, NSE. All right. Okay. One thing about some of these older indices is that the BSE ones go much way behind. So you've got more history. You can do some better analysis. So the first thing about the metal index is that it is now below its 2006 levels, right? That's 10 years, and that's really horrible. You've got multi-year supports at 2006, 2013, and now it has clearly broken below that, right? And we had uh, mentioned something about a false breakdown a few sessions back. It had come back, it had broken down, of course, and then just quickly shot back up, but then it's again back down. And if I were to look at say the indicators, well, one thing for sure is that you have a bullish divergence. So things are beginning to you know uh, take shape in as far as the metal stocks are concerned, in terms of the start of a buying opportunity. I'm not saying jump in and buy, but a bullish divergence is clearly there, and in the next few, who knows, weeks, a bottom could be formed, and once it is above 6,900, especially above 7,000, the metal index, BSE metal index, one should definitely consider buying it. Okay. All right. Now, within the metal, let's look at least some of the major companies. So I'll start with Tata Steel, and what you can see on Tata Steel basically is that good buying at around 215, really not sustained. The thing is that from a long-term perspective, this stock could be at the end of its decline. Okay, so you can see 2013 low, right there. Okay, should be quite clear now. And then the lows here of 2015 and the 2016, it was actually in an uptrend, and the whole market mood probably just spoilt that uptrend and made the stock go back down, right? So uh, you've got some very good supports here to work with. So this level, which is at 200 psychological mark, is a very good place to buy. And if it breaks even, a percent or two below 2000, goes to 198, 197, you should get out. So it's still coming down, and today and yesterday it has come down, so this has not recovered like the rest of the market. 210, 205, think about picking it up. So like I said, there is also the increase in steel prices domestically, should perhaps do good for that. uh, Done. So this is Tata Steel. Along with that, we've got, let's look at Jindal Steel. Oops. All right, so there is Jindal Steel, and one thing that's very clear about Jindal Steel, unlike Tata Steel today, it has a very nice hammer. So tomorrow, if it does, move up, then could be a good place to buy. Of course, there's going to be significant resistance at this point. Okay, and that's what it really needs to clear. And if it can clear that, then we've got a much better chance of this going up, and that level is at 66. Okay, and just from where it is right now, or it was at 50 or below 50 today, 55, a 10% recovery intraday today. From where it is right now to 66 is going to be a 20% move. Remember that, right? Please remember that. The scale can look very deceptive. It's from 50 to 170, but just going back to that resistance area is a 20% profit. uh, you know um, Even if you book out that profit, it'll be quite okay. All right, so Jindal Steel, and I just want to get the big picture. So from that massive level of around 780, 790, it has come all the way down to 50 rupees. And I just want to put that number, and you know what, how poor can you feel? This is like less than 10% of its peak, right? And this is what the ruthlessness of the market, and how wealth can just vanish quite literally from 750 rupees, 780 rupees stock. This has now become a 50 rupee stock, and you know it need not definitely be the end. But again, looking at it from a long-term perspective, okay, I've put weekly now. uh, there's a lot of volume, as you can see, in October, November, December, and that was all on the uptick. Of course, it got sold down on good volumes, but I'm just wondering whether there's been some amount of accumulation that has actually been going on in the stock. 60 seems to be a place where at a place where a lot of buying has happened in the past, and of course it has broken that. But again, like I said, I think it's mostly on sentimental reasons, and once those reasons are past, then we will probably see a much bigger move. uh, 60, From there, just wondering whether to. Okay, so yep, so around 60 seems to be a sort of pivot point. And if we, yeah, if you look at the indicators also, they are definitely showing some amount of strength and added weightage to Jindal steel. So that's one opportunity to consider going long on. Sticking with steel, let's look at JSW steel. Okay, so JSW steel, let's just look at the simple chart without the indicators. Going through what is called a complex correction, going all over the place, literally tough to make a call on this. This trend line, well, has actually held. I'm just extending it. I'm not changing its levels at all. Today, one massive move down intraday and a massive recovery. If it does, you know, break out of that, that's a pretty sharp level, just putting it on the outermost. So it have to break around 1025, 1030, and on good volumes, then definitely could go up significantly. So this, I think, definitely should be on your radar. You can see that it has made this sort of bottoming out at around 800, 850 for about 6 7 months, broken through resistances one by one, and in my opinion is sort of itching to make the breakout. Okay, sorry. And this is the weekly chart. Okay, so this is well, actually a little disappointing. 3 weeks of high volume drama. You can see that in the volumes, but in those 3 weeks, a lot of shadows, both upper and lower. So that's where a lot of the drama is. And once that is out of the way, you've got the 200-day moving average, the 100-day moving average, and all that stuff. So still definitely looking good. The other one is sale, of course, in this space. And well, that's really going somewhere else, isn't it? It's just going down and down and down. Should definitely not be uh, looked at all. But question is, all right, so it's broken that level also, right? The 2013 support. That's something important to keep in mind, that it has broken that and not been able to hold that. And at a lower level, could this go to 20 rupees? Remember, this was a 220 rupee stock. If the government of India was a person, it would be feeling really, really terrible. All right, so worth 10% of what you were a few years back, right? Okay, so that's the cruelty of the markets if you don't get out quickly. Lessons to learn. Uh, Having said that, please note that this is something which is characteristic of bear markets, which is towards the end, it just falls faster, unpredictably, but it also is a sign of, or let's say, a hint of a culmination move, sort of, it's not culmination, what's the word? That last, just throwing the bears out, and then you have smart long-term investors who have gotten in. Okay, but anyhow, you have definitely better charts. Jindal was much better, JSW was much better. Jindal was better than JSW, and Tata Steel was also good. To add Bhushan Steel. Okay, so Bhushan Steel, all right, so was showing hope, but whoa, something happened. Yeah, I think something happened. Some demerger or whatever, came from 200 to, in circuits. It was what? It was here, around 360, and and here it has come to 50 rupees in circuit. So I don't know what happened there, but so this is probably not a very good chart to analyze. So I think we'll let go of that and just what all the only thing we to do now is use psychological numbers, and once it goes above 36, consider buying it. Otherwise, leave it. Okay. Coming to other Vedanta, that's okay. 65 possible good support. All right. Uh, right. I'm quite sure that we've got better, stocks that we can buy. This also now broken the 2008 low. This is like really terrible. Okay, but something that we had pointed out earlier, and let's make it weekly to see if we can get some clarity. Still not very good clarity. I was looking at whether it was falling on good volumes or rising on uh, good volumes. A little tough to. Okay, it just sort of crashed through that support of around 80, 60, but let it settle down. Unless you're one of the high risk gamblers, you can afford to stay away from this. Okay, Hindalco. Okay, so similar picture. Stay away. These are stocks to consider shorting if things happen, but you'll find better shots. And then we're going to look at National Aluminium. So maybe good support, but leave it. And then you've got NMDC. Uh, it seems to have found some psychological support at 80, but it's just making new life lows actually, and should therefore, yeah, there's no technical picture in this to say that there is a place to buy. If anything, let this trend line get broken out with higher tops, higher bottoms, then you can look at buying NMDC. Till then, and by the way, fundamentally, it's an iron ore producing company, minerals, and iron ore prices are down, demand is down. China is actually trying to close factories so that they can, decrease supply. So all these issues are very much there. So this is NMDC, and that's it, right? Okay. So to put it on the metals, steel basically, right? So Jindal looked the best. Then I think JSW Steel, and then Tata Steel. Right? These are potentially companies that one could consider buying. Right? Okay. All right. Okay. So what I want to do next is basically, like I said, instead of going through all those um, stocks one by one, I just want to find some opportunities that we could perhaps focus on in the coming week. What you see on your screen here, something actually I wanted to cover earlier in the session, but slipped my mind, is stocks making highs and lows. So I look at about the entire basket in the Nifty, almost 1,000 plus stocks, and just to explain what you see, the red line right on top is the 20-day low, stocks making their lowest point in the last 20 days. So that's roughly a month, 20 trading days. So you can see that there's a big surge in the last 2 weeks, all right, 3 weeks of uh, uh, 1 week, sorry, right, of 20 days lows increasing dramatically. Then you have 3 month lows, stocks at 3 month lows. In the last 3 months, they are at the lowest price now. right? These were like going up a lot, and this one, which you can't really see well, I think I should change the color of that. That's 52-week low. So stocks making 1-year lows, right, on a trading basis are all increasing dramatically. Now, what you can see clearly today is that has come down significantly. You've seen quite a few stocks actually at the number of lows, either on 20-day or 3-month or 52-week high has come down. Now that doesn't mean the downtrend is over, but this is definitely a good, healthy sign as far as the market is concerned. Now what's squeezed down right at the bottom, and because of the scaling, we really can't make out. Well, let me see if I can. I'll try and do that. Should probably not help a lot. All right, like I said, didn't expect it to help. The scale is just too skewed. Right at the bottom are stuck the high stocks making 20-day highs, 3-month highs, or 52-week highs. And I'm not sure you could see it, but there's a small uptick in the number of stocks making 52 and 3-month highs, and probably also 20-day highs. Nothing substantial, but it's like a dead man trying to stand up. But you never know. That's how an uptrend could start, and that this is how a downtrend could get over. So there's some hope on a market-wide basis that things are getting a little better. Which just reminds me, since we are doing all that, why don't we quickly review what's happening in the world and see if things are still green across the board. And well, yes, they are definitely green across the board, as you can see. Okay, you should be able to see the US and world indices, and from the time we started, it has held its levels. At least it's not fallen down like many other days. Okay, this is also holding, and the S&P. Why is this? No, these charts are not updating, right? Okay, but I think the values are. All right, doesn't matter. If you look at the New York Stock Exchange, that's also doing quite well, right? Financial sector up 2.5%, as you can see here. That's the whole week, so don't get confused. You're seeing the snapshot for the whole week, not just intraday, and a further recovery today. All right, so that's good. And Europe would have closed still up and actually going higher, Europe, right? So if you look at the uh, any of these charts and zoom in, you get I think you get a nice uptrend which is there. So unless there's a last half an hour sell-off, looks like the week, at least the Friday, is going to end well, which basically means that we've got more reason to hope for a positive opening on Monday, and markets going up from there. So that's really nice. All right. Uh, yeah. So I was looking at these, and what could be interesting in some of these are stocks. Let's say doing contractions, right? So let's see. We've got this set of stocks for today: Bajaj, Bata, Hero Motors, KSCL, Ultratech, Ambuja, Apollo, Hindustan Unilever, and NHPC. So let's look at those. Bajaj. Okay. So code is code. It may not really look like a contraction. We are looking at actually it is. What we're looking for is actually contraction of moving averages, right? And that is what exactly we have here. All the moving averages are stuck in one very small zone, which is 0.8, 0.9% wide. This whole thing here. All right. So sometimes that gives you a clue. As you can see at this point, with the volatility which is there, you've got to really have a strong heart and a strong bank account. I would say stay away from Bajaj Auto, but put an alert, and if it goes above 2400 you should definitely consider entering it, and especially if it can do that with good volume, right? So that's on Bajaj. It's a buy above 2400 if it goes above good volumes, and a very good stop loss below 2350. If it continues to go up to say 252550 is a clear possibility. All right. Okay, the highest point will be around 26, right? Okay, then we've got Bata India, right? The moving averages, the short-term ones beginning to, uh, let me see the bigger picture if you've got a case here. Yeah, we might be 450. Okay, from 2012, definitely a support zone here. Okay, no doubt about that. So 450 is a good support, but at this point, I think it's only for high risk people. But if you're willing to take that risk, yeah, low volumes, moving average resistances, but once it clears 500, 520, then 550, 600 is a very good opportunity. All right. Okay. I'm going to put another one at 500 for future reference, psychological mark. All right. Hero consolidating. If you remember, just looking like Bajaj, let it break out above 2.6, then we can take a call. KCL. Huh. So this is a Kaveri seeds. It was 1,000 rupees plus, all right. And these guys make cotton seeds. I think genetically modified ones. And what happened is, this is what event risk is all about. Uh, the the price at which they could sell was set by the government of Maharashtra for Maharashtra, and the government just came out and decided to just revise that price one fine day, and what basically happened after that is that the price just started to come down. So the price at which they can sell the cotton seed to the farmer was drastically reduced, and then it just came tumbling down, and you see where it is right now at around 330. Now that's a 2013 zone. Okay, and definitely looking for support. 300 is sort of a tweezer's bottom. Yeah, can't say perfect, but good enough. All right. And a typical symmetrical triangle. The question is, which way does it break out? Does it break out on the upside or on the downside? Right. So that's the only thing that you have to watch out for. If it does break up on the upside, there's still the issue of all the moving averages, but if it can just go through that, then uh, this is also in the future side. KSCL 350 with a stop loss below 330, 328, sorry, but on the other hand, best to buy, go long at around 375 with a target of 400, maybe 420, and then a stop loss below 348 or thereabout. Right, so that is KSCL. Then we had Ultratech. All right, Ultratech Cement, good, multiple bottoms at 272650. Today there was some massive volume in it. Not exactly sure what's going on. So lifetime high. at 3,400. 2,650 is the level to watch out for. We'll have to wait and watch. Okay. Okay. Ambuja Cement. So interesting. We had Bajaj, we had Hero Motors. Now we're having Ultratech and Ambuja Cement, and very similar pictures, very similar consolidations going on. Right? Typically, this is what happens when things in the sector sort of move together. This is definitely interesting. Going sideways for 3-4 months. Right, good support at around 185. Not really broken down. The threat is here. Okay, you can watch for that actually. You don't have to wait till it breaks out of the 205. If it breaks above 200, then definitely think about buying Ambuja. It's okay here, but these are stocks that suddenly can just crack on the downside. This is a weekly chart. You can see there's a lot of ifs and buts on that. So best to avoid something like that, right? So wait and watch. There's no hurry. Okay, then we've got NHPC. Right. So NHPC, uh, big huge red candle on yesterday, today taking support exactly as you can see at the 100-day moving average, that sort of blue sand line 1940. That's the 200, and this below that is the 200-day moving average. Has taken support there. A little wild, 22 to 18. I'd just let this pass. Okay, Hind Unilever. All right. Hmm. Again, going sideways, nothing much. If you're into options, you might want to do something with HUL options, which is sell the 840, 850 call, even if it does go up 860, 870 next, and then 770, 780 puts. But with the risk of the market still potentially having the chance to go down, shouldn't be selling puts at all. Should, if anything, look at buying. Sorry, not buying, what are selling calls, not the puts. Okay, so that was just trying to see if we have anything else that we could trade. Hmm. All right, so there's nothing else on the report, but there's some other stocks that I thought I would show, which caught my attention today. One is IDFC. Okay, and what you can see is basically that it had a life high of around 205 long way back. Now it's come to 100. A 50% correction in the stock has happened, a little bit more than that. That's okay. And the last part, so if you're here, just follow that vertical guide. You can see that as the stock went down, the volumes went down, and then yesterday and today, the volume has picked up really nicely. Typical and classical Doe theory stuff. Okay, and if we look at the indicators, then they are also showing definitely some strength. I would definitely say watch this stock in the coming week, and there may be a correction from the high of around 110 to around 105 or something. If that correction happens, then idea will definitely be something worth picking up, in my opinion. The big risk in any telecom stock right now is the launch of Reliance Jio, right? And that's an event risk that if you are not happy with, you should just stay away from. But this technically is definitely showing some really, really good um, volume, picture, setup, call it whatever you want, and could easily go to about 120, 125, which is a nice 10-15% return, right? So looks like the downfall is over and you could consider looking at it. Okay, next is just want to look at some of the big banks which have really fallen a lot. So we've got State Bank of India here. Okay, so you can see you know that how the fall just got accelerated tremendously. And let's just extend this and see if this is all right. So the bottom here and this line is at 147, 150. Okay, a lot of drama happening. Nobody knows, of course, where the bottom is. All concerns with NPAs, non-performing assets, and that those things could really get worse and nasty before they get better. But 150 psychological mark, lot of selling that's happening here, as you can see on the volume. So you really need to be brave to buy it. Like I said, we don't have the time this time to look at uh, fundamentals, but like I said, I plan to do that in the next 1 or 2 weeks, because like I have some good valuations should be appearing. So I'm not sure 150, I'm not saying 150 is a good valuation, but technically if it is holding, and today sort of, then it could be a good buying opportunity. But give it at least another few days. Maybe one should wait till the budget is over before one decides what to do next, right? But it's a stock which has fallen by half in just 3 months, and it's the premier bank. So that, and talking about stocks, one bank which definitely stands out is Yes Bank. Okay, and what you're seeing here, just in case you're wondering, uh, is a, we had marked this as a potential uh, head and shoulder. So this was the left shoulder, the cursor. This was a big, huge right shoulder. Sorry, head, and then the right shoulder. And I think if the trend line, this neckline broke, then we are in deep trouble. The thing is, the neckline did not break. It actually held that support, and then has gone up. And again, it's gone up on higher volume. So probably a good stock to maybe have in your demat. It hasn't really cracked, but then having said that, the problem with that theory is that HDFC cracked yesterday and today, and then we've got things like Kotak Mahindra also cracking, which was not expected. But the thing is, if you look at the others, so let's look at Kotak. Okay, so that is Kotak Bank. That has come down quite a lot from its life high of 750, right? Yep. Why is it not green? Okay. All right. So I'm just putting two around 720 to 740. Try to do some holding out, but could not, and then has cracked around 600. It may find support, but the thing is, Yes Bank has not yet cracked, and that just gives you a hint of its internal strength. I'm not saying that it will not crack. I'm just saying watch it, right? This is HDFC Bank now, and you can see that this also finally cracked, and you can see the volumes have picked up after staying range bound between about 990 1000 on the lower side and about 1100 on the upper side. It finally just gave away this week, right? So this and HDFC, right? So the HDFC twins, as they are called, right, just being sold off. But will they recover? What I'm saying is, relative strength wise, yes, bank has not sold off the way the other banks have. And what do you say? The theory is, yeah, that when the recovery happens, it's not a question of if, it's just a question of when. Then Yes Bank is a stock which could do really well. The NPAs in Yes Bank are really, really low. It's like 2.5% or something. Everything else has 5, 6, 7%. And so those guys have really managed things extremely well, or the NPAs have not shown up. So if one just wants to, maybe dig into a fundamental report of Yes Bank and read it up or something, then please do that. Okay. So what was I looking at earlier? Yes. Okay. Okay. So around 650, really good support for the stock, right? A lot of selling happened at 900, but once, and this is a stock which looks like it tends to stay sideways for a very long time, and then it'll decide to just go up. So yep, and you can see massive buying that happened on this day. So that was, I think, results went from 660 to 750, blink of an eye, on fantastic volumes, and today also it has been bought. The moving averages are the challenge, basically. It's being offering a lot of resistance, but once it breaks about 750, it should definitely move up much higher. Right? Okay. Uh, let's see. Okay. These are some of the stocks that I had in my mind. Does anyone have any particular stocks they would like reviewed? Then you can put that up and we will review that before we close the session for today. If there is anything else in the meantime, feel free. Right? So, if any, while I wait for any request to come in. Okay, L&T and Reliance. Manju wants to know about that. Reliance. All right. So Reliance, lower top, lower bottom. Last week, or rather this week, at around 950 is where the 200-day moving average was, and it just broke through that. And once, actually, if you're watching it intraday like I was, 950 sat there for 3 days, and then when it broke through 950, it just collapsed in a matter of like half an hour or something. But still, the volumes did not pick up, so that's one thing. And today it went down to below 900 and got some recovery. Okay, I don't think it's not possible to say at this point that the fall in Reliance is over. 880, around that, 880, 890 is definitely a good support zone, as you can see from the cluster of. Let me have gone to weekly. Okay, from yeah. Okay, so this is a weekly chart. I just let it update on your side. We had this symmetrical triangle which had a breakout, and on the base of that breakout, one would have expected it to actually go up much more, but then it has broken back basically down. So the question then becomes: is this a false breakout? Okay, this is a false breakout, but one of the things about this breakout is the fantastic volumes that it had, and then the move down after that has really been on much lower volumes, or at least half the volume of the breakout. Um, So I would say that, going back to the daily, this 880 is an important level, but around 825 you've got this really nice triple bottom. I like it because nice open water in between, as it's described in Doe theory, and is likely to be a good support. If you're looking at it from a trading perspective, I would say wait and watch, and one should buy it or go long only above 970, 975 now, right? Otherwise it's like quite a risk to do that. That is if you are daily, and today you had a lot of volume also. If you're an investor in Reliance, then there are a lot of things that are happening. Two main things basically. One, their capex cycle is sort of getting over, and two, the launch of Geo could definitely be a game changer, not only for the telecom industry, but a next leg up in terms of revenues and profits for Reliance. Whether that will happen or not, that is at least 6 months to a year away. But from an investor's perspective, and that the markets tend to factor all that in early, then this could be a stock to be invested in. Uh, the very long-term picture, if you look at it, it's been a laggard for many, many years, uh, and really underperformed the NSE by a huge margin. The question is now whether it will, you know, what do you say, lead the market now. A little early, but yeah, that's the view at this point. Around 800 would be an excellent place to buy. It's very, very unlikely to go below 700. Like I said in the earlier part of today's session, a 5-10% correction on the Nifty to 6,300 cannot be ruled out. And if that happens, then all the long stocks that we spoke about today, there is a chance of it, going down to lower levels. But Reliance does have fundamental reasons why it could be considered for buying as an investment. Okay, L&T next. So the problem with L&T, especially on the fundamental side, is that quarter after quarter in the last 3 quarters, the management has, revised down the guidance, right? So they have kept saying less, 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 and of course there'll be some reason or the other all the time. And so L&T uh, clearly in a downtrend, really till the Indian economy recovers. I don't think we've got any hope on it. However, 1,000 rupees could be a good place for it to bounce from. We'll just have to wait and watch. Manju wants to know gold. So we look at gold Bs, not so much gold. And well, they have definitely made a fantastic recovery, haven't they? So this is the peak of gold. Okay, and what's basically happened is, fear, which is driving the market. And this was the downtrend on gold for well over 6 months. Okay, and that downtrend is clearly now over. Okay, and there has definitely been a lot of gold bees buying. The volume has also increased. However, this is a very sharp up move. Okay, so we had a base around 2,300. It's from 2,300 gone to 2,600. It has crossed all the long-term moving averages, and it has done that on really good volume. So we should probably expect gold to go up. Having said that, if you look at today's candle, we've got a nice hanging man almost, and if that gets confirmed sometime next week, then and if Nifty B is closes below, let's say 2540, okay, that's the level I'm looking at, right, somewhere there, right, then that's getting confirmed, and gold is probably coming back to 2450. So if I was looking to buy gold, then I probably wait for whatever reason, as an investment or as jewelry. And if I had gold and I'm like using that to make money, then I would definitely get out at 2540, let it come lower, and then buy again. I would not short gold, simply because some event risk suddenly and gold could spike up. Yeah, so and event risks are significant across the world. So if anything, may want to accumulate some gold at lower levels, just for the simple reason that the price could go up. And 2800 is probably a stiff resistance at this point. At yeah, I would say 2800 uh, at this point, yes, would definitely be a good resistance. Okay, so that was on gold. Any other uh, requests? No? All right, great. So, like I said, just to wrap it up, I think the global markets is something that we want to be focused on for the coming week. You want to basically, so the bounce in US, uh, the US markets have found support. The European markets are close to support, maybe 5-8% lower, and Nifty will find very good support around 6,300. Maybe it has at 6,800 or thereabouts, right? So there are reasons to believe that the market is bottomed out temporarily, but definitely would not say at this point that go all in and buy everything. That definitely needs to settle down, but that time is coming, and like I said, one should be ready sitting on cash to get into some of these stocks, right? um, Again, repeating that we will do a comprehensive fundamental review of the markets in the next 2-3 weeks maximum, and I hope you're around for that, because that should give us some really good insight as to what the fundamental side of it is. So technically, downtrend is very much there. Base has not yet been formed. Base support might have been found, but we cannot say that at this point. And on the fundamental side, once we've got some insight into that, I think we'll be in a much better position to look at what sectors and specific stocks to put some bigger money into, right? Great. So are there any questions? If not, then we are at the end of today's session. Thank you for your participation. The recording should be up by hopefully lunchtime tomorrow, and send the links out to you by then, right? Anything else for now? All right. So thank you very much. Good night, and have a great weekend, right?
Thank you, Dr.